Hello. The company being analyzed today is Atlanta Electricals Limited. This is a company which manufactures power transformers, inverter duty transformers, auto transformers. Today, we're going to analyze the company's financials, what the company actually does, and its future growth plans. So let us begin. First, we have a market cap of 6,813 crores. So pretty mid-capish company. Current price of one share is 886 rupees. The price to earnings ratio of 43.6 times and a book value. What is book value? Assets minus liabilities. Book value per share of 102 rupees. Now the historical financials. First, we are starting with revenue from operations in crores. Okay, it's in crores. So in fiscal year 2022, revenue from operations was 625.66 crores. Okay, increased to 873 crores in fiscal year 23, and in fiscal year 25, 1,244 crores of revenue, 18.75% CAGR. Then comes the EBITDA. Okay, EBITDA was 89.36 crores in fiscal year 22, and fiscal year 25 has increased to 199.88 crores. EBITDA margin of 16.07% in fiscal year 25. And finally comes profit after tax, increasing from 55.3 crores in fiscal year 22 all the way to 118.65 crores of profit after tax in fiscal year 25, a 9.54% profit margin. So we're talking about a barely double digit profit margin kind of company. Okay. Then return equity, return capital employed, the blue line return equity. So 33% return equity is very nice. Return capital employed of 39% is really, really nice. So great return equity, great return capital employed. Then here we have debt to equity declining from 0.97 times in fiscal year 2022 all the way to zero point 0.4 times in fiscal year 25. Downward trend, but increase in fiscal year 25. Lesser the debt to equity, better it is for the balance sheet strength. Then comes cash flow from operations in crores. So the company seems to be at least cash flow positive. Okay. 83 crores of cash flow in fiscal year 25, 51 crores in fiscal year 23, 88 crores of operating cash flow in fiscal year 24. So nice. Good cash flows being generated. And net working capital days, how many days it takes to convert the working capital into revenue basically. The lower this is, generally it is better for like cash flow strength. Then product mix, sector mix. Now here we will find out which product. First of all, how many products they have. Second, what product is contributing what. Okay. So first, 75% of the revenues come from power transformers. So transformers, they're like that electrical equipment transformers catering to the power sector. Okay. Then 11% is auto transformers. Transformers used in, I guess, automotive products, automobiles. 10% inverter duty transformers, so used in inverters, from what I understand, and 4% of the revenue comes from other products. So here we have the importance of different products for the company. And by sector, the transmission and distribution, T&D sector, again contributing 75%, because of course the power transformer is the biggest product, and 16% is coming from renewable solar. I think the inverter duties, I think, are used in like renewable solar. Okay, then renewable wind contributing 5%, and then 4% coming from others. So power transmission and distribution is the most important sector, followed by solar. Now comes the company overview. Atlanta, the glance. Okay, track record of strong and sustained performance. So present in 19 states and 3 union territories. 63,060 megavolt ampere is their current transformer manufacturing capacity. Remember that, okay? 63,060 megavolt ampere. So we're measuring capacity in megavolt ampere. In April 25, they acquired a company named BTW. They changed the company to something similar to Atlanta. But remember, an acquisition was made, and I believe till date, they have supplied around 1,07,222 megavolt amperes worth of transformers have been supplied, or 4,710 transformers have been supplied. Okay. The current order book as of December 31st, 25. So orders they currently have from customers on hand is 2,451 crores of orders. Okay. Then catering to number of customers from 77 customers in fiscal year 22 to 251 customers as of December 2025. So you can see number of customers has grown a lot. Okay. Then you already see this. One of the leading Indian power auto and inverter duty manufacturers. Okay, one of the leading. All right. Here we have some of the customers. I believe Adani, Tata Power, and some more. We got the capacities. We got the order book. We have gotten the volumes it has supplied before. Okay. Then leading manufacturer of a diverse range of transformers. So they manufacture transformers, but what are the different capacities they can manufacture? Starting from 5 megavolt amperes all the way to 500 megavolt amperes. So you can see the different ranges of transformers, capacity of transformers they can actually manufacture. Here it's mentioned auto transformer, inverter, power, also special duty transformer, also furnace transformer. Again, all of them have a range going from this range to this range. So each product has a different range, and you can see all the different types of transformers. We saw the most important, and the ones we did not see, like generator, power furnace, they're part of the other, the small other. And the end user or industry, it can be used for utility companies, industrial facilities can use them, commercial buildings can use them, renewable energy can use them, like the like solar panels and all, and electrochemical industry can use these transformers. So wide variety of applications are there, which means a lot of potential customers are there. Then quality focused manufacturing excellence. We already saw 63,060 megavolt ampere. And remember that acquisition we talked about earlier? Okay, this is an acquisition. They changed the name to Atlanta. I think that's Trafo. Atlanta Trafo Private Limited. This alone has a 15,780 megavolt ampere. It's included in this total. Okay. So see, this is an important acquisition for the company. Then we got one in Karnataka, very small. The big one is in Gujarat, this 30,540 megavolt ampere facility, this one. Okay, in Vadod, you got another place in Gujarat. So a lot of it is in Gujarat. So Gujarat. We got one in Karnataka, and we got this one. Okay, so we got the facilities. We got five in total, five different facilities. Then quality focus manufacturing excellence. First, look at this. This is the capacity utilization. So 61% of capacity was the utilized in fiscal year 22, increased to 98% of capacity utilized in fiscal year 2025. So you can see capacity utilization has increased, which is better for efficiency. Then the top 10 suppliers, that is suppliers of raw material, contributed 62%, 62.8% of total raw materials supplied, with no supplier contributing more than 14.5%. Where domestic suppliers contributed around 90%, while foreign suppliers were 9 point something 5%, 9.6%, 9.69%. Okay, so majority domestic suppliers. And of course, winding machines, tanking workstations, these are all the different equipment in their manufacturing facilities. Then, this is pretty interesting. So, the entire transformer market, two things came up. So all of this, okay, this one, the Indian power transformer market. So according to their own research, or the research they have shown here, the Indian power transformer market is expected to grow at a 26 to 27% CAGR from fiscal year 25 to fiscal year 29. I could not find any more reports suggesting the same, but according to them, they see it as 26 27% CAGR growth in the entire market from 1.3 to 1.4 billion USD to 3.3 to 3.4 billion USD. In the specialty transformer market, they expect to grow at a 17% CAGR from $320 million to $836 million. So that's pretty interesting. And you can pause and see this, the different ranges up to 66 kilovolts, up to 220 kilovolts, and different ranges and how much each range is growing. So pretty interesting stuff. The overall transformer market expected to grow by only 6.9% CAGR from fiscal year 2023 to fiscal year 29. Okay, so the power transformer, specialty transformer, they're expecting the market as a whole to grow a lot. Now, con call analysis, earnings conference call analysis. Here, the management themselves give statements about the company, and we can get more insights like future growth rate, beginning with what would be the guidance, the revenue growth guidance. So answer is, sir, it will be difficult to give you an exact guidance on the MVA front. So in terms of like volume front, it's difficult. But the exact terms that we have been maintaining that we have been continuing with a growth rate of 40% year on year, and we expect nothing less this year on revenue front. So in fiscal year 26 of also, they're expecting 40% revenue growth. Then for revenue growth on volume terms, they have produced 13,500 megavolt ampere for the 9 months. So for the first 9 months of fiscal year 26, that is the first 3 months combined, three quarters combined, sorry, 3 quarters combined, they've produced 13,500 megavolt amperes. Okay. So if we go by kilovolt class, the 220 kilovolt product contributed 45%, the 132 kilovolt contributed 19%, 66 kilovolt contributed 32%. So what insights do we get from here? First, 40% revenue growth expected fiscal year 26. Second, the volume, we get an insight of the volume, kind of volume the company is producing in like 9 months. Then we get what class is contributing, 220 kilovolt and 66 kilovolt. These products are the more contributing one. And finally, the order pipeline is close to 10,000 crores, and we have been witnessing a hit ratio of close to 10 to 15% in this particular year. This is massive. So order pipeline, all the orders that they are going to bid for or they're seeing are going to come up. They're already bidding for these products, sorry, for these projects, for these orders, they're already either bidding for or about to bid for. Okay. This pipeline, this the value of this pipeline is 10,000 crores, and this particular year they have been witnessing an order win ratio of 10 to 15%. So this year, of all the products, sorry, the projects they bid for, they won 10 to 15%. So if that continues, they could potentially win 1,000 to 1,500 crores worth of orders. Okay. Then a question comes for the management. Okay. First, we will start here. What is the sustainable EBITDA margin we should factor in for, let's say, the next couple of years, fiscal year 28? The answer is the margin has come out from the results. They are more or less fair and sustainable. The reason being, as we have maintained, lower the kilovoltage class, more competitive, higher kilovoltage class, that is less competitive. And the expansion in our growth has come from predominantly the 220 kilovolt class, hence higher kilovolt class contributing better margins. So they feel margins that have come out in the most latest earnings are sustainable. Second, we get other insight, I guess, about the industry. Higher kilovoltage product, lesser competition, better margins. The lower kilovoltage product is more competition, lower margins. Then question comes, what is the kind of order intake that you're targeting for fiscal year 26? Approximately 700 crores is a quarterly intake. We expect that to be about 600 crores quarterly intake this quarter also. So 600 crores ish of orders they want to win, new orders they want to keep having like every other quarter. Okay, every quarter, 600 crores, 700 crores ish. So that is the again another insight we get. Then about the balance sheet. Currently, the long-term debt sitting on the book as of December 31st is 65.57 crores. December 31st, 2025, long-term debt is 65 crores. This is primarily from the loan which was taken for BTW acquisition, and working capital short-term loan is 120 crores as of December 31st. Total tallies to 186 crores. So it seems the long-term debt, 65.57 crores, was taken for BTW acquisition. So without that acquisition, there was no long-term debt, or basically very low long-term or negligible long-term debt. However, the short-term, the working capital short-term loans are 120 crores. So the company's loans are more tied to the working capital. They're more short-term. Okay. And then they're expecting that after repaying a few of the long-term debt, the finance cost will come down during quarter four. However, this 65 crores long-term debt we project and we wish to repay during this fiscal year only. So in fiscal year 26 only, they want to repay this entire 64 crores long-term debt, and the finance cost they're expecting, the interest costs are expected to come down in quarter four. That will be a boost for quarter four. And finally, we get the latest financials. So let us first go to quarter three. Okay. In quarter three, the company was able to produce, I believe that is 472 crores of revenue. Okay. 472 crores of revenue. The EBITDA was 91 crores. Okay. With a 19.4% EBITDA margin and 19.4%. And they said this was sustainable, Remember they said this was sustainable? 43 crores of profit after tax and a 9.2% profit after tax margin in the quarter three alone, latest quarter we got. And the basic and diluted earnings per share, we will not look at this. So, here we have got the latest financials, and that is it. The PPT ends. Good growth seen in the past. They're projecting for higher growth in the future, like 40%. Good order pipeline, 10,000 crores of order pipeline. Let us see if the company achieves. Let us see if the company achieves their growth targets in the future.